Welcome to Market Overtime, special coverage of Nvidia's latest earnings report. I'm Diane King-Hall. The AI chip maker and semiconductor heavyweight just released its first quarter results for fiscal 2026. And it's a report investors, traders, and beyond were eagerly anticipating. In this episode, we'll hear from seasoned market veterans offering in-depth takeaways and the need-to-know insights on all things Nvidia and the broader AI landscape. First up, let's welcome in Rebecca Walser, President, Walser Wealth Management. Rebecca, thank you so much for joining us
Thanks
today.
for having me, Diane. Thank you.
All right, let's start out with taking a look at this quarter. Look, Nvidia reported earnings on an adjusted basis of 81 cents a share. Revenue topped 44 billion, so it had strong growth on both metrics. The street seemed to like the guidance. Does the reaction make sense to you?
I do think so, and I think the guidance it's really all of what the CEO said, right? He really set expectations. So really the EPS before the charge on the H20, so basically let's set the stage. We know that there is a ban basically on the H20, and basically the CEO said they couldn't further reduce or modify that to make it usable. So that has to be an $8 billion write-off. They took 4.5 this quarter, they'll do the rest later in segments. But that's why the earnings per share went from the 90 plus to the 81 cents. And I think investors can understand this is outside of the company's parlance. They have no control and ability. And I think the broader message is, look that we beat earnings even with these headwinds. I mean, China, it was only 12.1% of their revenue in this last quarter. And then you compare that to the previous two quarters at 14 and 15%. You can see the diminution of China. And China's going to keep going forward with their AI and their supercomputers. This is probably make them more innovative instead of trying to just steal all of our IP, but they'll still figure out a way to do it. We saw this stuff that happened in January with DeepSeek, and we know that that's an issue. So I think that overall, this is the kind of the grandfather of the AI super chip, right? And they are letting us know that even in the face of the headwinds of tariffs and not being able to sell into China, we're still going to beat revenue and we're still going to have really good earnings.
Yeah, it does sound like that they are still going to beat, but in terms of how Jensen's comments were with regard to flagging, wanting to clearly still have a presence there, it sounds like he still didn't love the idea that the export controls are there and the fact that it gives China a stronger ability to increase their own footprint there, especially when you think about Huawei.
Yeah, I was thinking of his comments. I mean, he basically said that China is essentially closed to the United States, and that is a sentiment that is problematic. But I like the sentiment and tone overall, his tonality when he's talking about, look, we have all these things, the autonomous vehicle partnerships that we're doing, 320 different companies they're working with, whether they're auto manufacturers or tier one suppliers to auto manufacturers, to integrate their chip technology into this new autonomous vehicle industry, which really, Diane, I think is going to take us in the next 2 years. I was in Phoenix recently and just literally went to a parking lot. Like they're being literally tested all throughout the city, but there was a second company basically that has hundreds of vehicles sitting and ready to be deployed. Tesla's obviously doing autonomous taxis in the Houston or the Austin market. So there's a lot of AI that we don't even realize in sectors that's going to be coming up. We just think of data, cloud computing, we think of these supercomputers, and that is all great. But what I thought his comments really spoke to is this is really the evolution of AI, and this is going to be in everything and everywhere, and we're going to be okay. Everything and everywhere.
Look, you still have a big driver when you think about the hyperscalers, the Microsofts of the world, Google Cloud, those are massive buyers, AWS. It seems like a large portion of his business still hinges on that, especially when you think about data center revenue, which saw a huge surge there. What does that tell you about the kind of demand picture for Nvidia?
It just, again, speaks to what I'm exactly saying, is that the breadth and the depth is very wide and very deep, and it's not just going to be about selling chips to China. I think that they're doing, their goal is to do 72,000 Blackwell GPUs weekly. Microsoft has already deployed tens of thousands, and Microsoft is saying we're going to need hundreds of thousands. Now, where all of this energy is coming from to support all this, I don't know. I would seriously suggest investing in utilities and some kind of new energy energy, but the fact that they have the Mag 7 and they have hyperscalers to that level lets us know that their demand is really broad. It is not just the supercomputers that would, or the computing power that could come from China.
Okay, so is Blackwell, in your view, really the biggest generator of a growth for Nvidia?
I mean, I don't know. I think that there are going to be things that are going to be less necessary, not such supercomputing power. But then they're talking about the ultra Blackwell coming out later this year, and that's going to have the ability to basically increase the token throughput by 25x. So that is they're in every nick and cranny of this market, and I think that they thought that China was going to be a bigger in play, and maybe it will. They did mention potentially opening an actual manufacturing plant in China to circumvent the tariff policy if it comes out.
Yeah, it sounds like they're trying to figure out a way that they could address the hole that's been created by the export controls when it comes to the H20 chip. Do you see them finding a path forward there?
I mean, it's going to be difficult because, as a U.S. multinational corporation that has tariff policy implemented, you would really have to bifurcate. Maybe, it's a subsidiary, but it's still connected. So it's going to be difficult to get their technology manufactured in China when it's IP protected in America with tariffs. But as you know, we saw the Federal Trade Court basically coming down on the administration saying you don't have the authority under this particular law. We fully expect the administration to go out to other laws, other sections of laws that give authorization for tariffs. There's another section that allows up to 50% tariffs. But again, that all remains to be seen. It is going to be difficult if there is an outright ban, like there is on the H20, basically, as we've been talking about. If there's an outright American ban, it is going to be difficult for them. They're going to have to really thread that needle legally very, very carefully. And they don't want to jeopardize, like we just talked about, all of their Mag 7, all of their hyperscalers, and all of that revenue that really gives them so much breadth and depth.
Okay, a lot of the sell side communities are adjusting their price targets off the back of these earnings for Nvidia. I saw several different more bullish views on it now, re-rating the stock higher than where it has been. It's made Citigroup raising their price target to $180 a share. They are buy. Morgan Stanley is overweight on Nvidia. They've raised their price target to $170 a share. The analyst community is still largely bullish on Nvidia. At the same time, I hear some talk that it may be the valuation is starting to heat up. It's made quite the recovery this year,
For
given
sure.
the troubles that it faced. You mentioned DeepSeek earlier this year, but over the past month or so, it's certainly made a turnaround. Now, at the time of our taping this interview, it is outperforming the S&P 500. Do you think this is sustainable?
So I would say in a world where all things are positive and we keep just growing and having kind of normal economic, situations, yes. However, I do see such global macroeconomic headwinds coming, and I think that's going to affect the economy in general. Like, when you see kind of the balance of the world, I wouldn't say de-dollarizing, but I would say moving away from the West and towards the East, the BRICS bloc, the Belt and Road Initiative, all the things that we have seen that China has sort of orchestrated. And there's a lot of things that people don't even understand about, the blockchain technology on Enbridge that China has taken over from the World Bank. Those kinds of things really are indicative of countries moving to the East, away from the West, and that gives us a lot of global macro headwinds on economic activity. This is why you saw oil drop, because before, when the tariff policies came into effect, it's like global demand is going to drop, global shipping is going to drop, all these things are dropping. So if you had sort of just a normalized last 10 years, not talking about the global financial crisis, just last 10 years of normal economic cycles, I think Nvidia is going to have an unmitigated runway up. Absolutely, because there is just not a direct competitor that has the technology foundation that they have built. There just isn't. And they can't get to that level without billions and billions of investment and a lot of infrastructure investment. So that's why they're poised to win. However, they still have to deal with the macroeconomic global situation as everyone else, and that could really be a headwind for them.
I know you talked about the headwinds, but I'm curious to know your thought about global potential tailwinds. Nvidia they've made this investment in Saudi Arabia. They made that big trip with Jensen Huang, making that big trip along with the president, with thousands of chips going over there. What's your view on that potentially being a tailwind?
I mean, I think the Middle East deals are another just a huge positive win, and it helps, you know, diminish the Chinese impact a little bit to let us know, hey, there's, like I said, the breadth is wide. They've got the autonomous vehicles, they've got the hyperscalers, they've got Mag 7, they've got, and now the Middle East deals. I mean, just the increase in revenue year over year from, you know, 26 billion last year, this quarter, to 44 billion, it is phenomenal. And to your point, it was 7 billion the year before, it was 26 billion. So we're talking about, you know, a 4x almost in 1 year, and then almost a 2x in the next year. So is this sustainable? I don't want investors to get ahead of their skis and think that this is a God company and they cannot do anything wrong. We saw with the H20 how things can have an impact, and we know that. But no, I do not see a competitor that is going to be able to get up in their face and bring them a real, you know, it's like they're one of one. They are one of one.
Well, the view was that AMD would be a closer number two than it has been. What's your thought on that?
I mean, I just don't know that they are going to be able to scale and create the infrastructure, even though they're a massive company themselves, that Nvidia has put into these GPUs.
Okay, and then I want to go back to the thoughts that you have about China. You know, you make a great point about in terms of what the competitive landscape looks like here, but obviously China is going to try to address that hole that the export controls creates. And as we know, CEO Jensen Huang has come out swinging with regard to his views on that. He thinks that the U.S. policy is misguided on this front, and he thinks that it actually would help Chinese rivals. What's your view on that? Do you agree with his take?
I mean, I thought his take was really interesting because basically what he's saying is what you're doing is unleashing the dragon, right? And you're basically saying we're not going to provide this for you, so you're going to have to figure it out yourselves. And we know how China is with IP theft. I mean, let's call a spade a spade. They are IP stealers. And so, you know, the DeepSeek, I think, was such a shock to everybody because they thought how, and of course the $5 million he said that it cost them, that everyone has discounted that and said that is just not true. That is China coming out and trying to say, oh, look what we did. We got your technology and we only did it for $5 million. So it was, everyone understands that that was not a true number and that it's a lot higher than that. But it is just showing you, and I don't mean to speak to of a country this way, but I think it's nefarious. It's nefarious intent to say, look, either we're gonna get it the right way or we're gonna get it anyway, and you're not gonna have the profits for it. And I don't think that CEO Jensen is off in his sentiment that this is a country that will stop at nothing to be number one, and if they see that AI is the way it's coming, they will go after that. And so I don't think he's wrong. I do think if you bring them into the fold and can control with controls and actual verification of what information and IP they have, then that is better than saying, we're excluding you, and then they're left to their own devices to do who knows what. And they're very, very strategic. They have been more strategic than us for 100 years, and they will continue to be if we don't get our stuff together in America.
Okay, so how should investors factor in that kind of thinking and that viewpoint? And the headwinds when it comes to what development China may do?
I think that we just cannot look at Nvidia as the God company. It can very easily have a God complex. Investors get over their skis and just get so excited, and then they think, this is great. I can just ride the AI wave and retire in 2 years. Maybe if you time it just right.
We would all love to retire in 2 years.
Right? Maybe, but much more likely that China is going to figure out their circumvention of what American policy is and make it work for them no matter what. So we just have to recognize that no matter what kind of trade sanctions and restrictions that America puts in place, China is going to do their best to circumvent that in any way they can.
I'm curious to know from you, what else stood out to you in this most recent report, whether it was in the data itself or on the earnings call? I mean, I think one of the huge standouts to me is obviously the data center revenue.
Yeah, exactly.
Huge surge there, up more than 70%. So that's one of the things that stood out to you.
Yeah.
But I also found that, even the fact that gaming, their origins increased.
Yeah.
I mean, obviously it's a much smaller component now, but what did you like the most?
I think that I really liked that, Jensen was really expressing that their goal is really to keep a 70% growth in profit margins, and that is they're aiming for that. That is massive. What other companies?
It is massive. Do you think it's realistic?
No.
Okay.
No, but I love that he had the chutzpah to say it.
Okay, so why don't you think it's realistic?
Well, because you have threats like China that will steal IP, that will come over here and set up shell corporations and buy your supercomputers and reverse engineer everything that you've got going on with their intellectual property that they have, which is also massive. Like, we just aren't, in a silo in this world. And I think that's his point. Like, this is a global world. These are global interconnected functioning things. Microsoft is in all of these companies are multinational companies. And to try to pretend that one country can restrict the kind of economic growth that is organically coming to the world is really ridiculous.
Do you think investors are underestimating the impact of those China's export controls, or those export controls on chips going to China, and the impact to development that China can do as a competitive threat for an Nvidia?
I think
or the
absolutely.
whole AI chip space?
I think absolutely. And I think DeepSeek, unfortunately, China tries to they get ahead of their skis and they try to make it sound like, oh, it was so easy and we did it for 5 million. So people discount that and then don't believe it. But the message was clear. We will get this technology, however, bed, bar, steel, whatever we have to do, we will get this technology and we will make it ourselves and we will make it for cheaper.
But do you think, look, okay, we know that there's some back and forth happening right now with regard to how much of tariff policy can be implemented. But it looks like, at least when it comes to certain tariff policy, it can. So, I know that you're saying that they would use nefarious tactics, but if there's tight enough controls, how could it get there? One, yes, they obviously would be a race to develop their own things, but you have the advantage of time on your side when it comes to Nvidia. And
right.
Is there something to be said for that?
I think so. First to market is always. Look at Google. They have dominated, even though search engine is going away because ChatGPT and all of these other Gronk and all these other things are people are using AI now to actually do their get more interactive research going than just a basic Boolean search of Google. So you can see that has on Google's side has really come down, but then they're coming up on the AI side, on the AI front, and their investments in research and development. So I think that China is going to get what they want, but I am pro-America, and I want Nvidia to have the ability to have the longest runway possible to reap the benefits of the investment that they made legitimately. So every American wants that for a company that really did things the right way, but China is such a threat. And that's why Trump is doing this. Let's be honest. He's saying, look, we can't live in a world where we create everything and then another country just takes it and steals it and monetizes it. That's not possible. So he's doing his best to fix this, but it is really difficult. And even our own country fights against him with our own courts saying, no, you can't do that. So, if we can't have any protectionism, then what will make a company make this kind of massive infrastructure investment? We need massive infrastructure into R&D, into drugs. If they can be just taken and made, cheaply made elsewhere, what is going to make U.S. companies do that?
I'm curious to know your thoughts on the Mag 7's performance this year. They've certainly made quite a recovery.
Yeah.
But it hasn't been the outperformers that we saw, for instance, last year.
Yeah.
What's your view? Do you think they'll reclaim that pole position?
I do think that I'm happy with the results this year. I'm happy to see that, okay, we can get back to some sort of normalcy of what our expectation is for their future performance. But again, this is what I'm talking about with Nvidia. You can't look at the Mag 7 as there's a solution to all of our problems. Even if you look at the breadth of the market last year, was pretty much Mag 7. That's a problem. We can't have the entire equity market relying on how 7 companies are performing, and 7 companies are really in the AI and IP space. That's really what they do. Software, technology. It's pretty scary to think. Now, the good news is as AI becomes more and more and more in our everyday lives, it will bring up utilities, it will bring up energy, it will bring up other sectors with it. It's going to change every sector that we know, and that's the scary part that people don't realize. I was just talking about John Deere and their autonomous move to vehicles, a 188-year-old company telling farmers that they can go to football games on Friday nights because all of their products can run the farm without them. And I think that's great, but then you start to think, well then, do I even have a job anymore? So it's like we really have to understand that this AI is a fourth industrial revolution, transformational change across everything we do. And it's important that we have some level of protection for the companies that make that massive infrastructure investment and R&D investment in our own country.
All right, we'll have to leave our conversation there. And we are the non-AI versions right now, but one day our digital twins
That's
may
right.
be talking to each other.
Right.
Thank you, Rebecca.
Thank you, Diane.
That's Rebecca Walser, president of Walser Wealth Management. Stick around, we've got more market overtime ahead. Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network. Welcome back to Market Overtime special coverage of Nvidia's May earnings report. I'm Diane King Hall here at the New York Stock Exchange. Joining me now, we have Daniel Newman, CEO of the Futurum Group. Daniel, thank you so much for joining us today. All right, let's talk about your initial takeaways from the latest results. They reported earnings on an adjusted basis of 81 cents a share. Revenue topped 44 billion. Their guidance, it's been received well. What's your takeaway?
Well, we knew that the situation with China was going to weigh very heavily on the outcome, and there were some people that were skeptical that with all the potential, write-downs related to China and then the future sales related to China, could they pull it off in this quarter, having had so little time to adjust to what was going on? And then, of course, what would guidance look like? I think the market was largely very satisfied with the fact that the company was able to pull off the number. They were able to beat top and bottom. Margins, if you exclude the write-down, actually ended up being just a little better than what were expected. And overall, the company was able to show this strength that even without access to that China market for a period of time, it has enough diversification, both in the customer base geographically and in its segments. And this, Diane, was probably one of the things that was interesting that wasn't mentioned by a lot of people was gaming saw great results.
Yeah.
Automotive had a 70+% year-on-year growth rate. And then, of course, even within data center, their networking bets are paying off because that kind of covered the shortfall in data center and enabled the company to make its result. So I think the market was largely satisfied. You could see it by the way it reacted both after hours, then in the next day, which often you see that fade.
It's true. Yes, in previous quarters and more recent times for Nvidia, even if they beat and raised, the stock is sold off the next day.
Yeah, well, first of all, there was this kind of period in time where this exuberance got to be so big, right? You go from 250%-ish growth rates to now, high mid double digits. But now you have to remember they're growing high mid double digits over those 250% growth rates. So the overall growth has been tremendous. The demand for the AI product services that Nvidia offers is palpable. And this whole idea that there's a bubble in AI kind of continues to be put to rest each and every time that Jensen Huang and the Nvidia executives announce their earnings. The bubble just doesn't exist. There are some consumption questions to ask about how this all gets consumed, but the fact of the matter is the CapEx numbers have been reiterated. The big companies, the Microsofts, Googles, Amazons, Metas, they're going to continue to spend. And now Jensen's talking about the future, and he's hitting numbers without one of the biggest AI markets at his disposal.
You mentioned consumption concerns. Tell me a little bit more about what you're thinking there.
Well, we have a few different challenges that are trying to be addressed as it pertains to AI. First of all, there is the power build out that is required. So we obviously are seeing these massive commitments, but we're going to need to build out the infrastructure, the roads and bridges that are going to enable AI at scale. But the other side of this is we've gone through earnings. Earnings have been largely good. The Mag 7 earnings outside of Tesla, which was a bit suspect, have been really good. And a lot of tech, Salesforce recently beat. ServiceNow had a blowout. But when you listen to their numbers, what's the impact of AI? Because enterprise AI, it's not just going to be these open AI, and it's not just going to be Meta, and it's not just going to be Google, people using search with AI. It's really going to be about this enterprise data, the data that IBM suggests 99% of it hasn't even been unlocked to AI yet. This data being consumed, meaning seeing dollars in earnings report where a company like Salesforce says X percentage of our revenue incrementally growing because of AI services that customers are buying, there's still a lot of questions. Have we built too much capacity? I don't believe it to be true.
Okay.
But the agent, for instance, the agentic trend line, the robotic and humanoid trend lines, the autonomous vehicle trend line, this is what's going to consume all this infrastructure. But because we have this global arms race, because the US and China are competing, because the biggest tech companies in the world want to make sure that they've built out the data centers of the future, the AI factories, as Jensen Huang likes to call them, they're all building so fast. But the revenues from every other tech company, and then the revenues from industrial companies, automotive companies, banks, where they can say AI is changing our business, it's making it more efficient, or we're growing productivity because of AI.
I want to ask you a little bit more about, you mentioned the Mag 7, and so we've seen some recovery in that group. It hasn't been the same level of leadership. Do you expect them to resume that kind of leadership through the balance of this year?
I think we still have the macro uncertainty. Each day there's kind of a new news headline that could change that. Here's what I like about the Mag 7 is the operating leverage allows the Mag 7 companies to make the significant investments that are going to be required to lead in AI and to basically transcend through any sort of, actually traverse would be the right word, through any meaningful disruption that could come from tariffs, that could come from a recession, that could come from continued macro uncertainties that we really don't know, geopolitical. We know that the relationship with China is really, it's significantly, it's delicate.
Yeah.
And right now we also have learned that there is a bit of a Trump administration put, meaning they're only going to let markets go so far. But at the same time, we've seen this kind of bond market reaction to things that actually at times doesn't make sense. You hear that tariffs are going to be canceled, then they're back on, and then there's going to be a court intervention, and then bonds go up. And you're like, well, I thought the bonds were up because of tariffs. Well, it seems that the bonds are actually up because of this sort of endless spending appetite that exists on both sides, both the Republican Party and the Democrat Party. And so all this ties together in the end, though, is we need lower interest rates if we want tech to rip higher. So all these things are interconnected. But having said that, if I'm an investor and I'm thinking about longer term and I'm thinking that there is uncertainty, what better companies to bet on than the ones that have the operating leverage of the Mag 7?
Let me ask you your thoughts on this, because you mentioned the competitive landscape, but I'm curious about your views as it relates to that when you think about China. Jensen Huang, the CEO of Nvidia, obviously came out and criticized the U.S. export controls, right? We've got very stringent export controls when it comes to China and any chips heading over there. Do you agree with his perspective that essentially this potentially gives China the ability to increase their position competitively?
Well, first of all, I agree with Jensen's position if I was the CEO of Nvidia. And I think it's important that I sort of bifurcate the answer, because as a CEO and with the interest of the shareholders and with the interest of the continued diffusion of AI from the West to the world, Jensen is saying all the right things. Now, let me take a step back and act as a policymaker for just a moment here. This is actually very bipartisan. The chip controls, actually, the Biden administration, you could argue, had even more stringent controls.
And they were going to put in the AI diffusion rule. But,
right.
But then, go ahead. Sorry.
No, absolutely. And under President Trump, he actually pulled back some of the diffusion rules, brought some significant investments out of the Middle East, which is an example of a region that we have complicated relationships with, but we're showing that we are willing to bring our best technology into those markets to create revenue for Western companies. It wasn't just Nvidia, it was Cisco, it was Amazon, it was Grok, there was a number of different companies that benefited from that. But here's the thing, I'm constantly puzzled about the idea that China's not asserting all of its capabilities, all of its resources to build AI leadership. We hear about Huawei and what they're doing there. We hear seen what they're doing with DeepSeek. They have half the world's AI researchers. They're run by a communist party that can basically at any time, ask Jack Ma, make a decision to sort of change directions and how they enable capitalism to exist inside of its system. So even if Nvidia wins, which I believe it has a bigger advantage than Jensen leads onto on the hardware, I believe it has a bigger advantage than Jensen leads onto because he's being a good head of state because he wants the relationship with China. I think CUDA is far more advanced than Huawei's CAN, which is their version of software. But in the end, I think the US has to understand, the same reason we don't give them the advanced lithography of ASML, is that we need to decide when are we seeding them to be equally or more competitive than us versus when are we using protectionism to make sure that the US and the West are able to gain a market advantage. I think policy will continue to be restrictive, protectionism will be in place, but I like what Jensen says, it's very important, is that we shouldn't be using protectionism as our goal. It should be a mechanism, but we should be driving to out-innovate China, to be the world's best AI technology that everyone wants to buy. Protectionism is a small cog in the wheel of market and global AI leadership.
Do you think that investment, the thousands of chips that are going to be going, for instance, to Saudi Arabia, helps soften the blow from the hole that the export controls chips to China creates?
I'm very optimistic about sovereign AI. So this plays a role in the question that you asked. Every major region in the world is going to build their proverbial data, AI factory, their AI data centers. It's a new architecture. There's massive amounts of data, massive amounts of throughput, and this is going to require a ton of energy and a ton of compute. So if I am Jensen Huang, you hear comments from people like Sam Altman. Sam Altman comes out and says things like, my GPUs are melting. He's literally saying, I can't get enough of this computing power. Yeah. We've heard Elon Musk say similar things. They've had issues with Grok and accelerating Grok because they can't get enough capacity. So I think if I'm Jensen Huang and I'm thinking about what I want to do right now, I might be considering, can we scale Blackwell faster? Because by the way, H20s are lagging technology. Blackwell is the future.
Yes.
Can we scale this, sell more of this into all these regions that want to build out AI? We heard about Taiwan, we're seeing it in the Middle East, we're hearing about it across Europe. I think there's a big opportunity there, but eventually the China market is going to be, they're going to want it to be accessible because it is a $50+ billion TAM.
Can the power grid here handle all of this?
Absolutely not. Not in its current state. Now we saw the Trump administration working to deregulate and speed up the development of small modular reactors. We need nuclear. We need more power. Right now China's putting multiple, I've heard as high as 2 coal-fired powered plants per week. They have 3 times the capacity of the United States for energy. And by the way, this allows them to use inferior infrastructure and being able to use them because they don't care about carbon emissions. They don't care about climate over there. Now, again, we shouldn't change our posture there. We should be concerned about sustainable technological advancement, but nuclear, for instance, is a cleaner power, could give us more scale, but it's going to take years to build out, and if we don't deregulate and move quickly, we won't be able to keep up on the air front.
How many years to build out?
It can be, they say 5 and even 10 to build these out. These are very sophisticated. Now again, we can build more coal fire, you can use other power, but it's dirtier. It's not the kind of power to scale. But at the same time, in certain parts of our grid right now, we're already nearing capacity.
I want to go back to the latest quarter from Nvidia. Yeah. A large part of their strength came from the hyperscalers, Microsoft, the AWS, the Google Cloud. How durable is that, and how long does that road, or how long is the runway for that in your view? Well,
you've seen some of their CapEx forecasts. It's about $325 billion for the year. I think Microsoft's was in that 80-ish billion, if I recall off the top of my head. About 50% of Microsoft's CapEx goes directly to Nvidia. Okay. So right now that spending is very robust, it's very secure, it's committed, and you're seeing it in the numbers. Longer term, the hyperscalers have a bit of a bifurcated issue with Nvidia. One is they're all kind of trying to build their own thing. This quarter we didn't hear a lot about the accelerators, the custom chips, because everything's been focused on China. Yeah. Last quarter though, we heard a lot from Jensen Huang about them not basically wanting to compete or basically being superior to anything that's coming out from these custom accelerators. The big hyperscalers, they do want to build their own chips. It's vertical integration, it drives more margin, but here's the beauty for Nvidia. There's the workloads that exist inside these Mag 7 companies. So it's like search on Amazon or tools for social media and optimizing on Meta and Facebook's platforms. But then there are the actual customers that purchase cloud consumption from these companies, they all want Nvidia. So these cloud providers are interdependent with Nvidia, and Nvidia is very well positioned in them, and they're going to have to actually continue to spend more to deliver on the future of agents and humanoid robots, which are multi-trillion-dollar opportunities.
What do you think about the pace, the growth rate? You talked earlier a little bit about that, their revenue pace. When you look at a 10-year period, it's mind-boggling how much they've grown. If you go all the way back to 2016, first quarter revenue 1.2 billion. 2017, that was 1.3 billion. 2018, 1.9 billion. The next year, 3.2 billion. Down a little bit at the beginning part of the pandemic, 2.2 billion. Back up again to 3.1 billion. Then 5.7 billion. Then 8.3 billion. 7.2 billion the next year. Then 26 billion. And then where we are today at 44.1 billion. How long can they keep this pace up?
Well, it's going to be a slowing. There's going to be deceleration here, but it's a law of large numbers deceleration, right? They went from 26 to 44, just under doubling, but the year before it was 8 to 26. So it was like 4x, and now it's only like just under 2x. But if you actually look at the volume of billions of growth, so this opportunity is going to be substantial, but I would expect, if I'm an investor, that you'd see a deceleration into these mid double digits. A good indicator, if I'm using history as sort of a basis, is how we saw hyperscale cloud providers grow. You look at Amazon, you look at Microsoft. A lot of these were doing triple-digit growth for periods of time, and then they went into high double digits. And now Amazon, the largest by a long shot, well over $120 billion run rate in their cloud business, is growing in the mid-teens. But having said that, every time they're growing in mid-teens, you're talking tens of billions of dollars of growth in a year. So the opportunity is very big.
Let me ask you this. For investors who are thinking about Nvidia now, it's made quite the recovery this year, but there are some analysts who say, its valuation looks a little high now. What should they be mindful of in the current climate, whether you're thinking about the technology and the growth rate or the geopolitical factors that are surrounding it?
Yeah, I like the company with or without China. The interesting thing is that, some companies get valuated based on the story they tell into the future. You look at a Tesla, people value the company based on Optimus and based on, solar panels. When you look at Nvidia, it's valuated very traditionally. And it's interesting because the valuation of it, even just weeks ago, now they've had a nice little run up, but it actually wasn't even higher than a few years ago. And in fact, it was lower than in those numbers that you were reading off from before. So if you're actually looking for a great company that puts off a ton of cash flow, that has a product that is really scaling the future, there's a lot to like about Nvidia. The only kind of caveat is, do you buy that it's going to be the provider of the technology that will power humanoid robots, that it's going to power autonomous vehicles, and that it's going to power, all these other industries beyond just the data center? Because I think a lot of the value from just data center has been pretty baked in as that growth starts to decelerate just a little bit.
All right, Daniel, thank you. Great conversation. That's Daniel Newman, CEO of the Future Group. Our thanks to Daniel. When we come back, Dan Ives shares his take on Nvidia's report. Market Overtime. We'll be right back. Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network. Welcome back to Market Overtime here on Schwab Network. Now let's turn to Wedbush star analyst Dan Ives. Our very own Nicole Petallides caught up with him on Monday to get his take on Nvidia's earnings and the broader tech landscape. Take a listen.
Your name is the name everybody breathes when they talk about the Mag 7 and Tesla and Nvidia. Dan Ives said this and Dan Ives said that. And you've been bullish and you've been pretty much right over the many years. This morning, I want to get to some of the headlines that I know are coming up. But, what's on you? I didn't see your notes today. When you woke up this morning, what was the first thing you thought when you thought about this market after an incredible May?
I mean, Nicole, I think new all-time highs for tech are on the horizon because, in my opinion, this is just the start of the next stage of the AI revolution playing out. And I think, look, the tariffs obviously continue to be in the background, and that's going to continue to come up in terms of the volatility. But I think the reality is, bark's going to be worse than the bite. And I think Trump administration further and further would just take steps back from the cliff. That's sort of our view.
Yeah, because originally you were very worried that we were pushed back decades with the Trump tariffs and all that. You were extremely worried. But now you're back to the rhetoric of new highs and the AI revolution, and you expect new highs for tech. When would that be? 6 months, 12 months?
I think close. I mean, I think as we get towards summer, into fall, you're going to have deals on the table. Whether it's India, whether it's Vietnam, whether it's South Korea, at least some framework of deals. And then I think it speaks to where the spending is. I mean, you go from chips now to software. And I think software is really going to be where, in terms of the AI revolution, that's going to be a huge driver. And then you look at the autonomous future, robotics. I mean, that right now is kind of going to be like where the next stages are of AI spend.
Yeah, we have Tesla coming up with its whole event now in Austin, right? I mean, that's around the corner. What is that, June 9th? So robo-taxis, more maybe on full self-driving. Some of your thoughts there?
Look, I think it's $1 trillion of value to Tesla's stock. I mean, to me, it's going to be a golden age for Tesla led by autonomous. And now you got the biggest asset of Tesla, Musk, clearly refocused, which I think is so important into this next chapter. And I believe that's how you're going to see a $2 trillion valuation for Tesla. I think a big piece of that is autonomous and robotics that's going to drive that.
So right now, when you see Tesla's stock, you think with a $2 trillion valuation, what does that mean for the stock price when Tesla today is at 341? Where does this go?
I mean, I think this could be a double next 12 to 18 months. I mean, that's our view. $500 is our base case, 600 bull case. But it speaks to my view that the biggest part of the value in Tesla is ahead because of autonomous and robotics. And I think when it comes to physical AI, Tesla and Nvidia, the two best pure play AI names, along, of course, with Palantir.
I was looking at some of the numbers. I mean, is this hogwash? I mean, does it not matter that, BYD was up 40% with its sales, XPeng 230%, while, Tesla numbers were falling? The sales in China, the sales in Europe, it didn't look that great for Tesla. I'm not saying Tesla's not absolutely great. I'm just saying some of the others just have some really impressive numbers right now.
Yeah.
Are you worried?
No, look, BYD, it's been phenomenal growth. But I mean, our whole view for Tesla is, first off, you're going to have a rebound second half of the year as you have refreshes. And I think you'll start to see growth come back in China. But a big part of the value going forward, it's going to be about AI. It's not necessarily going to be about units. It's about monetization of the 10 million Teslas that have been sold to date. And to me, that's really the story when it comes to Tesla going forward. Although clearly, you do have to see a rebound in China. You have to see some sort of stabilization in Europe, as well as a rebound in the US. But a lot of that is going to be new models and ultimately the next gen vehicles coming out.
I did see Musk's XAI launches $5 billion debt sale through Morgan Stanley. I guess that's neither here nor there. It's not really publicly traded, but does take Musk's attention. But I think you called Elon Musk and told him, get out of Doge and get back to work. Is that what you did?
And again, I mean, my whole point is there, as someone that's such a believer in Tesla and such a believer in Musk, there was no choice. He had to leave. And I think it's not coincidental the stock's done what it has since he announced that, because this is now the next stage that he needs to drive for Tesla. And he can't do it when he's sitting in the Beltway.
All right. So generally you come on here and you like Nvidia and you like Microsoft and you like Zscaler and you like MongoDB and you like Palantir. These are all names that you've told me you like. Which of those names, and by the way, someone told me today, Google, they felt that was the least overvalued in the Mag 7. Which names, if someone said, I want to make some money, which names would you pick?
I mean, look, I believe on the cloud play, it continues to be Microsoft. That's the one. As we go into the next stage of AI, I think that could be a $500 plus stock. So to me, Microsoft's the one front and center that sits there. When you look on the software side, I believe Palantir next 2 or 3 years is a $1 trillion market cap. I think that continues to be underestimated in terms of what they're doing, how they're really driving the future when it comes to core AI. And then we've talked about Nvidia, 4 trillion, then eventually 5 trillion. There's one chip in the world fueling AI, and it's the godfather of AI, Jensen Nvidia.
And where do you think Nvidia will be priced one day?
Look, I think ultimately you're going to be looking at $250 stock. As this all sort of plays out, near term 175 to 200. Obviously, tariffs clearly have derailed some of the growth in terms of China. But I don't think that story's done, right? In terms of the China piece, I think as you think about U.S.-China negotiations, getting back some of that's going to be key because Nvidia is not just handing that China business to Huawei.
I was terribly worried when you started to be really worried. And now you seem less worried. I just don't fully understand the turnaround unless you had a personal conversation with President Trump or something, which I wouldn't doubt. You really went from very worried, and you had some of our guests really worried, and now less so. You're back on it's going to be 2 trillion, 5 trillion, this will double. It just is. The tariffs are not going away. I mean, I think the tariffs are going to be here. They're just going to be less, but there's still going to be tariffs.
Yeah, but Nicole, if you go back to like those dark days, that was really like the tariffs that were on the table were, we're going to cut U.S. tech off the knees. Then ultimately the 90-day reprieve, clearly understanding that you're going to need to have significant deals. The China got de-escalated. I mean, I think when it's all said and done, you're going to have a 10% baseline tariff, and you'll have incremental reciprocal tariffs, 5, 10%. That's digestible. But if you go back to that first week, and especially that first 2 weeks, till really Besant, took control of things. I mean, it was a scary time. I mean, you talked about that, but that's why it's so dramatically different relative to what was potentially on the table to now. It's going to be a fraction.
Right, and we saw the board. We saw the board and some of those tariff numbers that seemed right. It was a lot. It was a lot for Wall Street to take in without anybody to take in. What about Apple? Last but not least, I mean, you started talking about if Apple were making phones here, it's going to cost me $1 bazillion to get a new iPhone. Are you really worried about that?
It's a fairy tale. U.S. iPhones being built in the U.S. Unless you want $3,500 iPhones, then we should build them in New Jersey or Long Island. If you like $1,000 iPhones, you build them in China or India. And my view continues to be Cook's done everything that a Hall of Fame CEO can do in terms of navigating around tariffs toward India, where I think that continues to be the life raft. And I think there's going to be more and more negotiations. But our bullish view of Apple is the consumer AI revolution is going to go through Apple. 70% of consumers are going to access AI through an Apple device.
What's the number one phone in the world, and in the U.S. in particular? And is it iPhone? And does it stay in the top spot and sort of, whip all the Androids and all this? What's the number one phone right now?
I mean, depending on the global market share, I think it continues to be Apple, but especially when you look at monetization, overall revenue opportunity. But I think looking at the phone itself underestimates what Apple's done because of the App Store. Because you have $100 billion services plus, where I think that's ultimately going to 150, 100. So that's a huge part of the valuation of Apple, which I believe yet again will be top market cap as we look out over the next 6-9 months.
Okay. Dan Ives, glad to see you. Thank you so much for being on today. Dan Ives, Global Head of Tech Research at Managing Director, Senior Equity Analyst, Wedbush Securities. I love when Dan Ives is able to join us. Thank you.
Thanks, Nicole and Dan. That wraps up this edition of Market Overtime. Be sure to like and subscribe to Schwab Network's YouTube channel for more market coverage and analysis. I'm Diane King Hall. Thank you for watching.